Hey, JB here from Squirrel. Welcome to another one of our little videos. The topic this week, we thought would be a bloody good one, is the recent LVR changes by the Reserve Bank. And there's been a wave of them, so let me just quickly talk you through what they're doing, why they're doing it, and then we'll talk about the implications for property investors in particular. So the Reserve Bank's obviously keen to lower interest rates. The whole world's going through this phase of trying to devalue their currencies, to sort of have this miraculous export-led recovery. So interest rates are lowering. The concern that Reserve Bank's had is that it's been passing through to the property market, and we've had very high levels of price inflation, particularly in the Auckland market, but more recently around the whole country. So to counteract this, they've started to put in a number of changes. The first ones that they put through were that they put restrictions on foreign buyers. Certainly making it a hell of a lot more difficult for non-residents to buy property here. They went a step further with concerns around anti-money laundering and stuff, and tightened up the bank's criteria around validating income. And a particular thing that happened is that they won't allow even New Zealand residents to borrow with any reliance on offshore income, and that's certainly dampened down the Asian part of the market, where they do have a lot of income coming in from overseas. So that was really phase one. Phase two, which came out of a bit out of left field, was they put a 60% LVR or loan to value ratio restriction on property investors, but not just in Auckland, across the entire country. And that was really to sort of seriously take the heat out of the property market and allow them to lower interest rates. So what are the implications? The implications of this are really serious. So I think it's worth hanging in there and listening to me rabbit on. So the first thing that you need to think about is, if you're buying an investment property, you're going to now have to have a 40% deposit. Most young people won't have that ability, so it's going to significantly hamper their ability to increase the size of their portfolio. For older investors, less of an issue. They'll have lots of equity in their property portfolio. But where it gets really interesting is, over the last couple of years, a number of people would have purchased investment properties and will be sitting in an overall loan to value ratio now of maybe somewhere between 70 and 80%. What you have to be careful about is that when you go to sell a property, you are going to be naturally assuming that you can get the equity out of that property when you sell. That's not necessarily the case. Because of the LVR restrictions now, chances are when you go to sell a property, the bank's going to take the entire proceeds from the sale to lower your overall LVR. And I think there's some significant risk there that people need to be prepared for. Now, there are some ways to manage this. And the most important way to manage this is to make sure that you've got your property portfolio split up across banks. Now, one of the exemptions with the RBNZ rules is the ability to refinance like for like. So we can take a property and a loan on that property, and it can still be at 70 or 80%, and we can actually refinance that into another bank and maintain that LVR. Now what that means later on is, in the event that you did need to sell a property for whatever reason, you haven't got one bank controlling the entire process, and that's going to give you access to cash. Which I think is really critical. So the main theme now with the LVR restrictions is, it's getting increasingly important. The more that the Reserve Bank sort of starts to try to control the housing market, it's getting more and more important to A, get really good advice, and to B, have a strategy, and C, make sure that you haven't got all your eggs in one basket. More than ever, it's really important to split your lending up across banks. So that's it for now. Join us for our next video. God knows what it will be about, but I'll see you then.